Thanks so much for tuning into the trade setup. I'm Neeraj Shah. It's Friday morning, and much unlike the fanfare of yesterday when we were nudging the 20,000 mark, within a kissing distance really of 10 odd points, we might not have that kind of um, optimism early morning at least. Let's see what happens during the course of the day. First the US markets, then the global news flow. So the US markets had a bit of a pullback, especially the Nasdaq in trade yesterday. Sharp gashes out there, and you know the reasons. Some of the key heavyweights, including the AI stocks, had a terrible pounding in session yesterday. TSMC in particular had a very, I mean, essentially everything across the board: Nvidia, TSMC, ASML, all of them came off in the session yesterday. The Dow was up about 0.5%, but the Nasdaq took a brutal beating. The yields expanded a bit as well. I think they've gone up very close to the 3.9 or maybe above 3.91. Yes, 3.91. So the yields expanded a little bit as well. The dollar index again back over 100, and that led to tech taking the beating that it did. Now, this would mean that the gift nifty, independent of what it is showing right now, will have a gash on open. It is showing a start which is positive, but with infi likely to do what it is expected to do, and the world market's not exactly hunky dory. I don't know if we'll start off flattish. Let's wait and watch. Um, Nevertheless, the global news flow. So we spoke about how the US markets had a beating, and one of the key reasons was that the US applications for unemployment benefits dropped to the lowest level in 2 months. US increases troop presence in Middle East amidst the Iran tensions. We hope this situation doesn't escalate. We can very well do without another large conflict in addition to the one that is already ongoing. Oil is set out to eke the fourth weekly gain with liquidity falling. And Japan and India have signed a cooperation agreement for chip making. Well, much needed. So in light of all of this, what is the trade setup for the day today? Well, as I always said, trade the market, not the forecast. And sharp knocks are very likely on Nifty IT, which may keep the lid on any kind of upticks on the Nifty. Now, the point is, viewers, banks are in fine fettle, and the gains in the private banks are actually broadening out. Yesterday, if you saw, Kotak Bank, ICICI Bank, etc., participated. It was not just restricted to one or two names or the PSU Bank X. And that is actually very positive news. So if banks can do well, if Reliance, in addition, ahead of its numbers, can do well, then you might well be with a fighting chance of doing that 20,000 magic number right at open, or in a sense in the first 1 hour. But even if that doesn't happen, excuse me, even if it were to happen during the latter half of trade, well, 20,000 is right there. We're almost there, right? So it's just a few numbers. Just that the infi spoil sport will snuff out the chances probably in very early morning trade. The good part, viewers, though, is that the reaction to con calls of Polycab or select others show that the market is willing to bet on strong growth. Now, keep in mind, everybody is talking about how very expensive stocks should not be bet on. Now, all those people who missed out that chance on a Polycab for that stock to do what it has done post results and post con call is quite astounding. It is not a cheap stock. It had gained after the results, and then post the con call gained another 10% yesterday. Just shows that if there is certainty of growth, certainty of high quality growth, the market is willing to bet on those names. Quite stunning, really, what's happened here. And it's probably a message to what could happen to almost all of these um, building materials stroke electric goods pockets as well, and at least the ones which are focused. Now, you would argue that Havells could have had the same outing and probably did, but Lloyd's spoiled the party for Havells in some sense, right? We'll be talking to the management today, of course, at some time later in the day, to try and focus on all of that too. But let's wait and watch how it shapes up. So that's my argument. Flows look okay. Foreign investors bought another 3,000 crores in trade yesterday, so that was good going. DI sold about 193 crores, which is fine. It's a busy day of results. A lot of index names and a lot of non-index names as well coming out with numbers today. So look at Reliance, Ultratech, JSW Steel, and HDFC Life amongst the large index names. Then there are some large non-index names in the likes of Hindustan Zinc or DLF, more importantly, Ashok Leyland, which is expected to come out with a rock-solid quarter. Watch out for Ramkrishna Forgings. It's had a really good run. Tejas Networks has had a really good run. A lot of these stocks which have done very well Aarti Drugs signed DLM, imperative upon the stock to actually deliver a good number. So let's see how this goes. There's also a strong listing expected today. Utkarsh, small finance bank, got subscribed heavily, very likely will list strongly. Now, excuse me for the throat. Stocks to watch in the session today. Infosys, everybody knows the numbers and the fact that they cut the guidance. I thought what was important to bring in was the key reasons for the cut down in the revenue guidance. And look at those words: mega deals pushed out and delayed for a longer interval. A big, significant cut in discretionary spends across segments: BFSI, retail, telecom, high tech. Volume from the mega deals, which are currently under execution, is slowing down due to macro challenges in the key economies. And therefore, I would suspect that not only are mega deals getting pushed out, but the current mega deals also will get spread out, and therefore it impacts the current year revenues. Decision making has slowed down, affecting timely deal ramp ups. You know, this is not good. Now, the point is this Infosys specific, or could it happen to others? Last quarter, everybody was singing a completely different tune of what's happening to a TCS versus what's happening to an Infosys. This time around, people will probably talk about what's happening to an Infi versus what's happening to some of the others. Now, the point is, HCL Tech did not say any of this. They said that yes, Q1 has gotten impacted, but they're very confident about Q2, Q3, Q4. We've spoken to Infosys today. We'll be speaking to Persistent today. And I think that's the kind of questioning that we'll do to all of those as well. That are they seeing these issues coming up in their conversations with their clients, especially companies which are North America based focused? So Persistent, I think, is 78% from NA. I think it'll be important to figure out whether North American share for Persistent is different than what it is for Infosys. And Persistent business model is different. But Emphasis, right up there. It'll be interesting to see what they have had to say. Speaking of other companies, Persistent Systems, the numbers. So I think Infosys will start off lower. That is to be given. Sorry, just before we get to Persistent, Infosys will start off lower. Sorry. Infosys will start off lower. And the interesting piece is brokerages are divided. So Jeffries says that there will be a buyer. In the note they have written, there will be a buyer post the 9% fall. They arrived at a 9%, maybe on the back of the ADR drubbing. But they are saying that if it corrects that much, there will be buyers. Some of the others are saying, we want to reduce. So it'll be interesting to see how it goes. Now, the others. So Persistent Systems, the numbers. And the revenue numbers were in line with estimates. But for Persistent, they had a one-off celebration expenses, as a result of which EBIT down, margins down, net profit down, much lower than estimates. Now, will the street give it the benefit of doubt that this was a one-off? And yes, it was a one-off, and therefore it's all cool. Or does the street punish it for doing this? Well, let's see. I don't have a clear handle on this, to be honest. The adjusted margins were almost in line with estimates, maybe about 60 odd points lower. So that's the view on Persistent. Coforge, the numbers seemed okay. More importantly, they have reiterated the FY24 annual revenue growth guidance of 13 to 16% in constant currency terms. We know what happened to HCL Tech after they did that. So maybe not a bad day for Coforge. Emphasis, not quite sure. Revenues were down 3%. The other aspects seemed okay and in line with estimates. So 3252 versus 3362. So the revenue fall was steeper than what was anticipated. One anticipated a flat revenue. They've come down 3%. EBIT margin is flat. Net profit fell 2% to 396 versus 403. Maybe a bit of a pickle for Infosys as well. Excuse me. Then HUL. By and large, the numbers seemed okay, but for the fact that the volume growth numbers was disappointing. So revenues 15496, expectation was 15491, EBITDA margins flattish, net profit or in line with estimate, net profit almost in line with estimated. The problem is the muted volume growth, around 3% versus 4 to 5% level over the past 2-3 quarters. That's the problem. Let's see if HUL kind of plays a part in undoing the kind of good work that ITC did for the FMCG index yesterday. Remember ITC nudging that or hitting that 6 lakh crore market cap mark. Let's see if HUL puts some pressure on FMCG today. Then one other disappointment is Dalmia Bharat, and will certainly correct today. Revenues up 10%, 3624 versus 3693, which is fine. But EBITDA margins came off 16.8% versus 17.8%. Not a great performance. Net profit fell 30% to 144 crores versus 205 crores. So poor set of numbers. Very likely that Dalmia Bharat will see a bit of a reaction in the session today. I wouldn't be surprised if it does show. Um, Union Bank actually had a good outing. So if you look at the Union Bank numbers, NII 8839 versus 7581, net profit more than doubling, gross NPA is moderating, net NPA is coming off a little bit. Are they still at elevated levels relative to some of the others? Yes, but relative to its own history, the GNPAs are looking okay. So Union Bank could actually do well. What will do well is United Spirits. I don't have brokerage notes as yet on this one, but the performance is very strong. EBITDA margins really expanded. Net profit up 83%. It's good going for USL. Premiumization strategy likely playing out for this one. So suffice to say that we might see a bit of a positive reaction in this one. Tanla platforms, the numbers seem okay. Margins have expanded. Maybe this stock too reacts positively. India Mart Intermesh, if not for results, then for the buyback will react. So these are the results. Firstly, revenues up 25%, margins flattish, net profit. There are one-offs there, but be that as it may, the more important piece for India Mart is the next plate, which is that it is approved a buyback. Board is approved a buyback of up to 12.5 lakh shares, representing about 2% stake via the tender offer. The buyback price will be around 4,000 per share, a premium of 38% over Thursday's closing price. So very likely that India Mart Intermesh, to my mind at least, could react positively. So watch out for that one. Speaking of buybacks, Larsen and Toubro is the other one. The board has approved a buyback. Rather, sorry, let me correct myself. It's not approved. It's considering a buyback and a special dividend on July 25th. So this one could be interesting. Now, on this, um, there is a note. I saw a note on L&T. Yep. So Jeffries has a note on Larsen and Toubro. They're saying that the buyback or the special dividend is the management delivering on its plans. They say it's in line with the management's commitment to return cash to shareholders. 2nd August 2023 will be a special dividend record date if approved. Approximately 6,600 crores is the net cash position of L&T uh, standalone. Assuming that half, which is around 3,300 crores, is used for buyback, it adds 10 to 40 basis points to FY24 and 26 ROE, taking FY26 to 17.9% versus our assumption of 17.5%. But the implied EPS impact, is less than 0.5%. So maybe not too much. The price target, though, for that brokerage on L&T is about 2910 versus the current price of 2494, which means an uptick of about 17% from the current market price. It's trading around its 52-week highs, but who knows? There could be more in store. So watch out for Larsen and Toubro in the session today. Uh, the buyback may help the stock a little bit. Then there is HAL, and defense doesn't go out of flavor, does it? HAL, the Argentinian defense minister has visited HAL, and there's an LOI that has been signed on cooperation for light and medium utility helicopters for the armed forces of Argentina. Viewers, for all of these businesses, which is defense, which is railways, the last 12 months or 18 months, the managements have come out and said that because of the large capacity that we are now utilizing and setting up for India ops, we stand a chance of being competitive globally. We all scoffed at it, and rightly so, because the history was against that. Most of the times, these spaces are only flattered to deceive. The last 12 months have been different. I mean, you look at what a Mazgon dock is doing every single day. You look at what a Titagarh Wagons is doing every single day. And brokerages, Mazgon dock is separate, but in Titagarh, there's an HSBC note which we've storified on our website as well. You can read it. Where in the note, when the analysts are saying that they are now jumping on the bandwagon, or the companies jumping on this whole bandwagon of uptick in railways, and there could be substantial upsides there. Their target prices were higher. So the limited point I'm making is, without getting into individual stocks, is that some of these defense names, some of these other manufacturers, PLI manufacturers, are now having the size which makes them competitive globally, and which is a great sign. Now, Will it definitely last that way? I don't know. It's something that we haven't seen. We've seen private companies, pharma, spec chem, IT services, the poster boy, do really well on the global scale. And some of these businesses also do an encore. Who knows? But for now, the party is strong. So HAL should be in focus. Rice stocks could be in focus. India has banned non-basmati white rice exports to check the local prices. Maybe it's a bit of a dampener for some of the rice exporters. So watch out for those two in the session today. Net, it'll be interesting to see how some of these stocks shape up today. Some of people were asking about whether it's a good time to do an SIP into IT funds. Might not be a bad idea. For the next 6 months to maybe 12 months, this space is under a bit of a cloud, going by Infosys commentary. But this is the time when there is a downtick to maybe accumulate some of these high quality companies. Since you don't know it very well, it's best to do it through a mutual fund. So maybe not a bad idea. We'll definitely ask this question on our next mutual fund show as well. But I don't think it's a bad idea per se, as long as it's an SIP and not a lump sum, because nobody can predict what will happen over the next 6 months. But the long term future for some of these companies, time and again, has been proven to be very, very good. So watch out for these as well. And a clutch of conversations lined up today on BQ Prime, earnings conversations. So Havels will be an important one to hear out from the management, Mr. Anil Rai Gupta at 10:35. So that is something you need to definitely tune in for. There will be Persistent Systems CEO Sandeep Kalra, who will be in conversation with me talking about their quarter. So do tune in for that. And Nelco, it's Q1 review and more with CEO PJ Nath at 12:30. There is emphasis in conversation with my colleague Tushar, the CEO and the CFO. So that's at 9:40 a.m. and that will give you some idea about the other IT commentary too. You might want to tune in for that as well. And of course, the trade talk conversations at 8:30, 11, and 3:15. So all of those would be important. Thanks so much. And let's hope that the other sectors buckle up and we nudge the 20,000 mark today. It'll be great to have a solid weekend. Thanks so much for tuning into the Trade Setup.